Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Let's check in on the market. Gap up open to all-time highs in the S&P 500, and this is the kind of setup where I, as a day trader, can very easily distinguish my plan of action in terms of just eliminating half of the direction, because it can get overwhelming when we're looking at what to do. Do I go long? Do I go short? What am I doing? Every morning when you're establishing your trade game plan, when I see a gap up open of this size, I can very clearly say to myself, I'm either looking for bearish entries for hourly consolidation or I'm not trading today. And that just keeps it very, very simple and clear cut to know one direction to be looking. We need to be looking for 5-minute losses of uptrends. We need to be looking for 5-minute downtrends confirming themselves. That tells us that hourly consolidation is underway. So just as an example, for SPY, looking at starting the morning and how to approach the morning, we had a pre-market uptrend to be watching. So as we got to the open, I said the most important support level for me is 296.41. If that level breaks, we lose the 5-minute uptrend. A more aggressive bear is going to go bearish on that break. A more conservative bear is going to wait for confirmation of the downtrend. So we break that support, then we see the lower high and lower low. As soon as we hit that second low of the day, or I should say the third at that point, that is confirming the downtrend. Once that 5-minute downtrend started, we stayed in a very clear 5-minute downtrend, rejecting from the 20-period 5-minute moving average resistance for about 4.5, 5 hours the whole day. And then when that finally changed, we had a trend change right here with a little higher low and a higher high, and this candlestick closed over the 20-period 5-minute moving average for the first time during this today. And from that follow through, we ended up going over $1 in less than an hour. So that 5-minute trend was a great guide. When we change the 5-minute trend, we look for an hourly higher low to form. And where we stand on SPY, we're still in an hourly uptrend, even though we saw all that consolidation from the morning. And we're going to be looking for an hourly lower high. The reason I'm looking for an hourly lower high is because of the size of the pullback. If we only pulled back the first 3 hours and then saw a bounce, the potential for continuation would be much higher than this current scenario. So watching for a lower high, but of course, where we start the morning pre-market tomorrow will be key as to what to expect. So 296.92 is our resistance and our new all-time high, and our support. If we break the low of today tomorrow, we lose the hourly uptrend, which means we zoom out and look for daily consolidation. Anything over 290.35 will be a daily higher low. And again, the daily uptrend is the most important thing for me in these markets because I am a bull as long as we are in a daily uptrend. IWM on the daily, gap up open into some profit taking. Again, same thing. If we lose the hourly uptrend, which means breaking the low of today tomorrow, that means we are looking down at 150.76 and trying to form a daily higher low compared to that level. Looking at the hourly consolidation, same thing. We would not anticipate continuation. The most likely scenario would be an hourly lower high. QQQ, same story. 189.77 was the high. We broke that. If we break the low of today, tomorrow, we're looking back down at 184.65 as our key support level to try and maintain the daily uptrend for the bulls. XLF, significant gap up open. This is the second gap up open in a row. You guessed it. If we break the low of today, tomorrow, daily consolidation will be underway, and we'll look for a higher low compared to 26.89. Very notable bull break on XLF. And you can see the move on XLF the last 3 days compared to QQQ. XLF providing a lot of the strength that's helping the S&P 500 get that all-time high. XLV, which is also one of the major holdings in SPY, is not helping too much either. So really XLF, the last 3 days, the most significant bull out of the major sectors that I'm watching. So for XLV, we have our high, low, and if this is our lower high, we're going to pull back and the bulls will have to hold 91.50 for a higher low. If we lose the daily uptrend, we zoom out to the weekly and we'll look for a weekly higher low to form. But any of these individual names, healthcare, financial, or tech sector, if any of them lose their daily uptrend and SPY still has not lost its daily uptrend, that's a red flag for me. And that increases the odds that SPY will lose its daily uptrend. And it can give us a little bit of insight or perhaps a little bit of a canary in the coal mine type scenario. XBI, significant bull break. And surprising that both IWM and XBI could just head straight to higher highs. But of course, when you see the kind of gap up open that we saw in the market today, all ships rise with the tide. But breaking 88.77, great sign for these bulls, highest price we've seen in a couple months. And if we break the low of today, tomorrow, we look for a daily higher low compared to 83.33. The bulls have a ton of space to work with to form that daily higher low. The VIX had a big time gap down open, and we haven't seen many gap down opens recently, but that was the case here. And if we're going to change this daily trend, we're going to have to see a move over 1670. Remember all this resistance at 1670? We were highlighting pretty much 1640 to 1670. And yes, I know it's not resistance, but that's the language I use to describe charts. The bulls could not get over that level. The price could not get over that level. That's a clear level that is now important to us. So I am not looking for the volatility index to make any significant moves unless we clear 1670. And if the bulls can follow through, and if we can see some weakness in the S&P 500 carry through tomorrow, then we'll see if we get a tightening range. But pretty much 1320 to 1670 is the range that I'm currently watching in the VIX for the start of July. U.S. oil. So we had a big bull move to start the day, but then a big sell-off, and then a solid bounce. So volatility was there in oil today all over the place. If we see a break of 57.73, that is a notable shift that will lose the daily uptrend as far as I'm concerned, and that will have us looking back down into the mid-50s. But if that level holds, the bulls keep complete control. So our new resistance level is 60.26, and the bulls need to make their way up to higher highs. Natural gas. So the inverse head and shoulders pattern is still alive. I'm going to have to see a change in the 4-hour trend to be confident that our right shoulder low has formed. So I would need to see a 4-hour bounce, a likely lower high being set, and then a higher low and a higher high. 4-hour trend change would be needed to have confidence that that daily higher low is established, and we're going to look back up at 2381 if that is indeed what happens. Keep an eye on natural gas here in July because it's starting to show me some signs of shifts in momentum, and considering how bearish we have been on this weekly time frame for the last 7 months, it's worth watching for a shift in that momentum. Multiple weekly inside bars looking for a break of that tightening range. So I'll be watching closely this week. Gold has pulled back significantly, so all those bulls that missed the run, this is your time to be entering on consolidation. Weekly consolidation is underway, and we're absolutely looking for a weekly higher low to form on gold. If we can hold 1375, the odds of a weekly continuation move will be likely. And if we start to drop down towards 1350, the odds of a weekly equilibrium will be more likely. So I have interest in the miners heading into tomorrow. We have the 4-hour RSI on gold close to oversold. If we get a leg down here overnight, that 4-hour RSI will be oversold. And I did make an initial entry in NUGT today, right at the end of the day. Pretty much break even, I think 24.40. It's just a small starter position because it's a swing. I use smaller positions for swing trading than I do day trading because day trading I'm in complete control, and swing trading that's not the case. So I made an initial entry, and if we were to drop down and if gold gets to 4-hour oversold, I will add to that position as I am looking for a weekly higher low to form in these bull miners. So if you missed the initial move up, entering on consolidation is the way to do it rather than FOMO chasing on the way up. So for most individual names, as far as stocks are concerned, the lows of today will be key because we will confirm hourly downtrends if those levels break, and then we'll be looking at daily consolidation in the attempt for the bulls to form yet another daily higher low and try and maintain their uptrend. I appreciate you watching. We'll check back in tomorrow as always, and I'll see you then. So one of the first major projects we're going to be working on is building raised beds in this general area. And going to have to fence it off, but the game plan will be to essentially shave off the top few inches of this sod and flip it over onto itself, and we're going to make a worm lasagna basically. So we're going to do that, and then we'll do a layer of manure, and we'll do a layer of some wood chips. Going to go around the yard and collect all the rotting logs that have mycelium already growing on them bury those logs in there with the dirt. We'll get a bunch of leaves, and I'm definitely going to have a bunch of leaves to get in the fall, and do a layer of leaves, and then over the winter have that bed already established and put some cover crop on it, whether it's some winter peas or something along those lines, to fix nitrogen into the soil, and to their roots also create little airways and waterways that make the soil healthy. There's essentially trying to build up a colony of beneficial bacteria, and you could compare it similarly to your insides, in the sense that, you know, are you going to start with a fresh stomach and throw food in there and hope for it to digest? Or are you going to build up the beneficial bacteria in your belly and then put some food in? So that's the goal with letting the soil have all winter to do its thing. So we'll get some secondhand wood from a sawmill and make those beds out, and then put wood chips in the paths in between, and then fence it off eventually. So we'll start with this space and then expand it to other spaces. I love watching the crows and the hawks battle it out. And move on to other spaces from there. So the process now is getting, you know, a dump truck of wood chips delivered, a dump truck of manure. You can generally find free manure out there, but you do want to make sure that the horses aren't being pumped full of pharmaceuticals and all that stuff, because it will end up in their manure. And leaves, I'm gonna go out and steal a bunch of people's leaves bags when those are out on the side of the road. And there's some big trees, probably 20 years old, that have been cut up from when they cleared all this land, and those logs are all up back here, and so I'm going to collect those, and I'll keep you all posted on the process. It's probably going to be multiple weeks, doing everything real slow and no rush on anything, which is nice and convenient.